So welcome to this new video. My first videos were just market analysis about the crypto market, but I thought I can also make some new content based on trades that I took, like trade recaps or missed trades, just for learning purposes. So I want to start with that with gold. So let's go into it quickly. I will try to talk a bit faster so the videos are not too long. Okay, so what is the overall context? We know gold super bullish on the high time frames. So yeah, you can say overall structure is just very bullish on the 4 hour. Then on the 1 hour, what do we have? We had the, let's see, you could say that this is your range high with the range low right here. And then this week started with a strong weekly open push right there. So at that moment I knew, okay, this is looking to be breaking out of the range, even creating range structure demand right there. So main bias is bullish until proven otherwise. So at that point I zoomed out, looked, okay, what is our structure? Here we push up, push down, push up. So the main bullish structure to look at is this. So then I always like to mark it out. Then I know everything above this horizontal line is mainly bullish. So yeah, mostly interested in longs, only in shorts if it's really clean. So let's zoom in a bit. I like gold to trade it on the lower time frames. To be clear, I didn't take any of these trades because my focus was on something else, mainly the crypto market, but I saw some trades later that I could have taken. I also shared it with the group, but I did not take it. So the first one was that we, if we look at from the low, price made high, higher low, higher high, higher low. Then here you have two candles. So this is valid structure, high low, higher high, lower low. So here technically price broke local structure back to bearish right there. Let's delete this so you can see it. This can also be seen like a 1, 2, 3 indicating weakness, 3 drives. So then you can always look for potential short, but I always want to have structure confirmations. So let's see. Locally, here you can see that low, high, high, low, higher, high. Here, clean breaker structure right there. So so you could say this is your whole range supply right there. A range supply price break structure comes back into it and then gives a redistribution. So here you could have taken a short after that break structure, which the aggressive one will be here on the close. Let's say your average entry is there, stop above that high. Then my first main target will be the last market structure low, which is this low, for around a 2.2R. And then I will gradually take even more profits towards this sell side liquidity. But if we zoom a bit out, we can see that price went a bit lower till around this low before bouncing up. So 2.7R I would have taken profits. The rest stopped to break even. But this is where it gets more interesting. Because if we look at the structure, we can see that from the high down, if we look at the main structure, it's lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then here you can already see that you are trending down. So then you can pull ranges from low to high. So what you can do, this is your low there. And then I always want to see at least a sweep of the low or from the high before I'm interested in potential range plays. But what you can see here is you have tab 1 at the low, tab 1 at the high. Here you sweep your low, but don't close below it. So for this you can pull your deviation threshold, which means that if you have a range, which we have right here, any moves that stay within that red zone can be seen as deviations and not as range breaks. So if you close below it, then lower high for lower low is very likely, but any moves within these zones can be seen as deviations, so then you can just play range rotations. So at this point I shared it with the group that we could potentially look for longs. I did not take any of the trades for transparency, but right here what happened, tap 1, tap 2, then price made its way back to the range highs, even made a little model 1 redistribution with your 1, your 2, your 3, broke structure right here, and then came back to the range lows. But this is where you have your 1, you have your 2, so technically you can extend your range low to the second tap and then look what happens. So this is where it gets interesting. Right here, your new range is this, the model 1 played out. You could have traded it, but I was more interested in the long. You can see, okay, what is the structure from high to low? Is this. So you don't have any good structure. If you look at the 2 minute, on the 1 minute, it's the same, I believe, where you don't have any good structure to work with. So here you take out your range low, and then you know, okay, this could potentially be a model 1. 1, 2, 3. Model 1 accumulation target, at least the range highs. But if we look at structure, there's no clean structure. You only want to work with structure if it's clean. If you have to force structure, where you say, okay, I see here 2 candles going up. That's my structure. Yeah, you can use it, but I want to have clean structure. Then you can say, this to me looks more like supply. Right there. Let's call this supply. Right there. So then we can look what happens from the low up. Right here. We can see that price takes the range low. What happens? Price comes up. Then it comes back down for, this is where you have to scan through your time frames. Because you see after taking the low, price pushes up. What leaves it behind? A 5-minute OBIM, an order block with an imbalance. So that's what I always like to put on the chart. This is demand. And then on the lower time frames, you can see that price comes back for that demand. And then on the 1 minute, you have structure to work with. So right here, you have, this is that 5-minute OBIM. Price comes back into it. Here you can see from this high, your structure is low, high, taps the OBIM, break structure right here. So this could have been the aggressive entry with your entry on that 1 minute break. Your stop loss technically could be here, but to be sure and have a little bit calm of mind, you can use this stop loss, the third tap, because that's your clean invalidation. Target will be the range high. Then let's zoom out a bit what happened. Price made a nice push, came through this supply zone, which I call like a flip. Supply fails to make the lower high. In first instance, you see the reaction down, but then you flip it, which is a sign of strength. But now it gets interesting because here you see price pulling back. So a lot of times people get scared, but you can always ask yourself, why does price pull back here? Then you can go to the time frames again. What did price leave anything behind right here? Then we can look. Price came back. Let's see. It came back for a new OBIM. I'm not too sure on which. I dare to say it was yesterday. There. If you look at the 2 minute, price came into that 5-minute OBIM. Then structure broke back to bullish. What did price leave behind? Once again, a 2-minute OBIM right here. Let's call that the demand zone. And that's always something to be aware of. That's what I like to do, to scan to the time frames. What does price leave behind? Because otherwise, if you see price pulling back from here, you get scared. Oh shit, why is it pulling back? Blah, 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 blah. But if you know, okay, there is a reason for price to come back, then you know my stop loss is below this low. It can come back for that OBIM and then push up. So that is what happened. Price came back for that OBIM, touched it right there. Then here again, there was not really any clean structure. So you had low. Yeah, if you have to draw a structure, it would be like this. But that's on the 1 minute not even valid. On the seconds it will be valid. But here you could say this is your last supply. So then you can look, does supply do its job? The job of the supply is to react and give price a rejection to a new low. If price fails to do that, which you can see right here, and you see that price pushes above it, even creating new demand right here, then that's a clean flip, indicating strength in which you could enter stop loss below that low, because at this point, this OBIM got cleared, this OBIM got cleared, so the market maker is clearly taking all liquidity possible before pushing it up. So there's no reason to get below this low again. So at this point, you could potentially take a new trade or tighten your stop of this trade to that low and then add size. Here you could enter. Main target is the local range highs for a 2.3R, but since high time frame is bullish, you can always let some run, and that's also what you see here. Because what did price do? It took out that former high. So if you could have let that run for like a 6R, super clean, local 1, 2, 3, model 1 accumulation. You even in the process had a model 1 distribution, and this is what I call a 1, 2, 3 model 1, taking extreme liquidity, higher low is a extended model 1 into a model 2, super clean trade. And at this point, because price came back, you can say this is your new range to work with, range high. Then the third tab of the model 1 is your range low. And then since price tapped the mid range right here, you have a valid range to work with. So then you can extend your range. Zoom out a bit. Tab 1, tab 2. Then what happened? Price completed the 1, 2, 3, the model 1 accumulation, came into the range highs. And what happened at the range highs? Then you can look again for structure. This is all super clean range plays, which happens a lot. High, here high, candles going down, higher low, higher high, higher low, higher high, lower low. So if you look at this structure pool, you take out the range high right there, you break structure back to bearish, and then even if you go like to the 2 minutes, you can see that price is creating supply. So here you can already see move down, move up, aggressive move down. So here locally you are creating supply in the process, which got tapped right there, and then price sold off again. So at this point, this is your range high sweep, structure break. Here I would look for potential shorts back down. So how can you look at it? You have structure from high to low, low, lower high, creating supply, lower low, taps supply, aggressive reaction. Then you can look what does price leave behind. The last structure right here. So this is again what you can call structure supply. Well, what does price do? Here, range supply, structure supply, same thing. Then price comes back into that supply, rejects again. You can look, is there any structure? On the 2 minute there isn't, but on the 1 minute, from the low up, you have low, high, higher low, higher high, higher low, higher high. Where do we break structure? Right here. bearish break structure. At this point, you have a supply chain where here you created supply, price came into it, sold off, price comes into this supply, sold off again, break structure. So here you could enter another short, stop loss above that high if you want to be safe above that high, but basically because you already broke structure, came into supply, there's no reason to come back above this high because you already mitigated the supply zones. So then you can take a short. What is there to leave to hold price up? Nothing really, because you had some demand right here, but that got already mitigated on this move. So that's gone. And then what is here? This is basically all liquidity. So you could look for that liquidity to be taken. Then what did price do? Price continued the overall downtrend. There, lower high, lower low, lower high, lower low, lower high. Then we have to see what happens from here. And then again, price goes back to the lows. So this was again a 5R to the range low, because that's the clean part, is that price from range high formed a model 1, took out range low, higher low, took out range high, from range high back to the range low right here. Then price did take out the range low. Let's clear up this all again. Was there a trade to be taken from the range low? Because right now you could say this is your tap 1, this is then your tap 2. Is there structure? There you can already see this move down is very aggressive, so there's probably no structure. The first structure you can look at is this: lower high, lower low, lower high, lower low, lower high, lower low. So this is then your main structure you need to break to confirm this as your second tap for a move back to the highs. However, at the moment that happens, you are already at your mid-range. So then, yeah, do you take a long here? Stop loss has to be that low. Target is the range high, which is now this point, for a 1R. Yeah, you could take it. For me, it's not a way to play it. So at that point, I would look, where is demand? Did price, what did it leave behind? Then I can see here you have this pull down, bam, push up, leaving demand behind. So this is a OBIM I would look at. That if price comes back for that, you can look for the higher low play. Then you also have like a little demand block right there. On the 1 minute, it could be a structure. Yeah, so you can also mark that out as a first POI, or just use this zone. Include that 1 minute block right there, and then watch for these two zones to look for a higher low with some structure in it, break structure. Then you could take a long right here, stop loss either there or under that block, or under that block if you want to be really safe. Target the highs right there. But price just made a slow grind up, taking out the highs again. So right now what I am potentially looking at is, are we gonna form a model 1 distribution? Right here we can extend. It was our original range high, we swept the range high, came back to the range low. So right now this can, oh, that's still wrong, DL, and we can see, okay, as long as price stays within this zone, this could potentially be a another deviation for another move back down. Then is there anything, any clear demand? Then I see the first demand I see is right here. So that would be a level to look at. Beside that, this is all liquidity. So can this potentially be a 1, a 2, a 3, back down to here at least, potentially even lower? Because if this is a model 1 distribution, technical target is the range low, which at this point is, yeah, basically the last point, but I would use the original range low. So how can we identify if that's the case? Let's look at structure. Do we have 30-minute structure? We don't have 30-minute structure. We do have 50-minute structure, because here we have 2 candles going down. It are 3, but that means that this high, higher low, higher high. So this is our main structure, 50 minutes. So if we break 50-minute structure below here, that's the confirmation for me that this is potentially the model 1, and I would look for shorts. But you can see that if we break this, we are already pretty close to the range low and also towards this demand zone. So let's look if we can look at lower time frames. Do we have 5-minute structure? Then we can just look from this low. Do we have structure up towards that high? Yes, we do have. We have here high, higher low, higher high, higher low, higher high. And then here we can see that this broke structure on the 5-minute already, which is right here. But yeah, this is all pretty tight price action. So here we can see that the 5-minute OBIM got mitigated right here. So that's mitigation. And then what is happening on the lower time frames? We have a high, swept the high right there. I see that we have equal highs right there. So that's basically a liquidity point. So locally we have low, high price, created some supply right here. Why did it create supply? Because you can see that your structure is on the 1 minute from here, high, low, high, break. So this is your range supply. So a potential play I would look at is maybe if you get a move into this zone, you break structure again, like that. You could try a short. Technically, you would say you can put your stop above this high, but I would give it a bit of room because we have equal highs, so that's a liquidity point. And then first target would be this market structure point, because it's possible that price takes that low, doesn't close below it, and then you have an SFP, and then you can rotate back up again. But main TP would be towards that demand right there, this demand block there. And technically, if this turns into a model 1, then your technical target would be the range low. So that's what I would look at. However, I would not force it. I would only trade this with clean triggers, because if you use like logical thinking, price is in a high time frame uptrend. We accumulated with the 1, 2, and the 3 right there, made a reaccumulation with taking out all the liquidity, direct move back up to the highs. Main structure remains bullish. Also right here, internal structure also bullish. So there is clean buy interest. So it could also mean that this distribution fails and you get a close above, and then it's very likely that this was a reaccumulation range, and then I would look for continuation longs back up. So quite a lot of ways to play this. Right now I'm just observing it. I'm looking for potential shorts as explained right here. Just for the risk to reward, I like shorts here. But if we get a break above, then it's very likely that we just continue the bullish trend higher up. Overall, super clean price action on gold, especially on the lower time frame. So if you are a scalper, this week has been amazing to trade gold. For now, I'm interested to see how this develops. I want to thank you all for watching this recap. Leave a like if you like these recaps, because then I know to do them longer, to make more videos of them. I have no idea how long this took, but I hope it wasn't too long. Else, a good tip I can give is to just put the speed on 1.5 or 2x, and then it takes half of your time, because your time is valuable. So yeah, that's what I often do. For now, thanks for watching. Maybe I will record another video with market updates later today, because the markets are pretty hot. But we'll see. Thanks for watching, and cheers.